Hi everyone, today let's talk about fear, greed, and opportunity, how to handle some market swings, and then of course we'll get into all the usual charts and data to see what we're going to get for the end of March. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So fear, greed, and opportunity, how to handle some market swings, let's talk about it. They're talking about some volatility. While you're investing, panic selling can lock in losses, which is what I did on the Monday, which was super frustrating. But rather than making extreme moves, try to make thoughtful adjustments. Maybe I should have read this article last week. That would have been nice. But here we are. Let's talk about it. They say there are new reasons to worry about the stock market every single day, whether it's the Fed constantly changing trade policies, potentially mixed signals around interest rates. It seems like there's a lot of uncertainty in markets. And sure enough, there is. They say the VIX has been elevated. We've been talking about it. You can see their VIX chart here. We've been talking about it, looking for this to pull back, and we'll talk about that later as well. But VIX has been elevated. Volatility has been elevated. Stocks have been moving a lot. But typically when you see these kind of 10% corrections every 18 months or so, and usually those are pretty decent buying opportunities. You can see here 10% once every 18 months. Average length is 135 days. Maybe that's part of why we're seeing some concerns around markets right now. It did happen very, very quickly within 3 weeks or so. So the move was more aggressive, more of an elevator down style move, which can tend to turn sentiment. So that is something to consider as well. We've been talking about that on the channel, looking for that lower high setup as a really good trading opportunity. But understand that volatility is generally short-lived. We are looking for that pullback, that counter trend rally now. Again, after just a couple of weeks of movement, we're looking for at least a week or two of rally. You do have to look at liquidity like they talk about here. We have a lot of money moving into treasuries as well as gold, which is signaling a little bit more concern about markets. We've been advocating on the channel for a long time, buy things with yield, buy bonds, keep cash in interest-bearing accounts. Things like that are good opportunities to help avoid some of these moves, and we've been talking about that before we had the bigger down moves. So that has played out really, really well. We've been buying. I've been advocating for buying those assets at current prices. I did step in and buy a little bit of the broader markets at this price, which I do think is definitely a better position now than it was, especially on the tech side of things. But panic selling, we've been seeing that. We're hoping for that kind of culmination down move, which I think will be the second down move. We got to get the lower high first, and then we'll get that lower low, and then we'll see if we can kind of stabilize after that. But places to be: gold, bonds, cash, just like we've been talking about. I've been putting REITs in that category. REITs have held up quite well. Real estate, things with higher yields and more solid assets to kind of back that valuation. But adapt your portfolio. We've talked about it in the M1 portfolio. That's a dividend growth style portfolio that has done really, really well this year, despite the bigger moves down in the broader markets. Things like staples, sure, dividend paying stocks, absolutely. And you can do that through a number of ETFs. Big fan of real estate. But of course, over the longer term, sometimes the smartest move is to do nothing at all. Of course, in the traders market, we do try to make adjustments pretty much every single day to try to capture as much as we can with limiting the risk. But in my dividend growth, I've been just kind of buying slowly as we move down. Not that those assets did go down too much. So think about what you're buying, things with yields, things with value versus those growth stocks. Look for things that are undervalued. We said that bonds were pretty undervalued for a while, especially considering the cutting cycle, which the FOMC did reinforce this previous week. They still are looking for 2 cuts this year, which will bring interest rates down another 50 basis points, which should allow bonds to continue to stay either stable or rally over the next year to 2 years at least. So again, good places to be, but also think about what your time horizon is. If you're still buying for the 10 years plus, probably keep buying. You're probably in good shape. But if you're trying to trade shorter term, then you need to do the kind of analysis that we do here on the channel and make sure that your strategy is suited to the current market sentiment. Looking at fear and greed, we finished the week at a 23 here. You can see 20 was the previous number, so we did step up just slightly. You can see it slowly grinding here. I'm a little concerned that we did not accelerate a little bit better. We're kind of basing off here, potentially just going to continue to base. I would have wanted to see a better spike out of these really extreme fear numbers, and we just haven't seen that yet. Breadth continues to improve. This is the 200-day breadth. We'll take a look at that later. Put-call ratio continues to kind of come down a little bit better, down into the 0.7s, but again, it's not moving very quickly, not moving very far. And then you have volatility. This one's very concerning, right? You got that 50-day moving average right there at 18.68. Very close to a touch there. I think we'll probably get a touch on the Monday or the Tuesday, probably the Monday, and then does it spike up from there? You can see we kind of chopped in this zone September into October last year, and we kind of hovered in that area, getting more and more spikes. Safe haven demand finally showing some strength as bonds kind of pulled back a little bit and stocks kind of leveled out. This is the 20-day average between the two, so they're leveling out a little bit. Bonds have been much better over the past month, but now it seems like we're starting to kind of recover. And then looking at junk bonds, still sitting in regular greed. Overall, still a pretty low metric with a couple of these indicators recovering. Hopefully this moves into fear next week, and then we can see a little bit of a recovery towards that neutral zone. That's what I'm looking for, and then I would expect some selling once we hit neutral and head back to a lower low. Moving over to the AAII survey, this has been incredibly consistent here for 4 weeks. 4 straight weeks of pretty much the same numbers, just a very slight step there on the bulls, neutral getting squeezed, the bears, again, pretty consistent between 58, 57, and 60. So still tons and tons of bears. I do think the bears are going to win, but this is a contrarian metric for me. So generally, if the bulls are getting squeezed, I'm looking for a little bit of a bounce, especially after 4 weeks. Still looking for that counter trend rally, but once we do get the counter trend rally, I am expecting the bears to take back over with these really, really strong numbers coming off of the all-time high. So I'm still looking for that, and this is another indicator that it's likely to come. Moving over to the economic calendar here, you can see for the Monday, a little bit of soft data, global services PMI, manufacturing PMI, not expecting huge numbers out of there, but you can see the previous numbers still above the 50 line, so we're not seeing a ton of weakness there yet. Want to see that continue. Consumer confidence, very important here for Tuesday, like I mentioned at 10 o'clock. I think that's going to be relevant. New home sales, fairly interesting. Core durables, like I mentioned, fairly interesting. The previous number for the month over month was 0%, and then the headline number 3.2. Want to see that continue to stay quite strong. 5-year note auction, Atlanta Fed GDP for Q1. Want to see that get a little better. That's a weak number for sure. If it actually ends up being that, I'm going to be very concerned for markets. It hasn't followed through quite yet. This is the Q1 data. Like I said, Q4 I think is going to be important. You can see the numbers here. The previous was 3.1, and we're expecting to get a 2.3, so a pretty substantial step down for the final number. Because this is the expectation, it should be priced in, but if we get a number here that's a little bit weaker or even in line with expectations, that could be concerning. Core PCE prices, also their initial jobless claims, continuing to see that stay flat after getting a little bit of a spike. And then the core and headline PCE data, that is the Fed's preferred inflation metric. Want to see that continue to stay light. If this comes in light, maybe that helps out markets, but pretty good amount of data and impactful data this week coming out of quad witching. Moving over to max pain, obviously we are done with the witching here, so not a ton of options, not expecting a huge amount of movement. Huge put wall at 525, not expecting to get anywhere near there, but you can see max pain 569, just a little bit above current price. Maybe we get another sideways chop style of a week. Put call ratio fairly high, 2.2, nothing crazy there. And overall, not a lot of spikes on the numbers. 570, okay, puts and calls at that area. A little bit more calls than puts, so maybe we get stuck between 565, 570. So low threat week potentially based on max pain, but like I said, there is a ton of data, so we might get a bunch of swings inside of this range, and then as we finish the week, we come back into the kind of middle of that range for those market makers to make the most amount of money on the weekly close. Moving over to the charts, starting off with the S&Ps here, you can see this is the weekly chart. We were very slightly positive, 0.5% on the weekly chart. Obviously haven't retraced any of this, but what I'm looking for here is look at this RSI, right? So you have a big move down here, looking for a push up retest of the SMA and then get that continuation lower ultimately. So something like that is what I want to see. We have very consistently down moving divergence as price was going higher. We expected the pullback and we got it with a clean double top. 55 EMA sitting there at 56.21. That has been support. We held that through the session, couple of tests, and then held it for the week. Momentum still bearish, RSI still bearish, but again, it's a little extended. Usually when you get this extended, you do see a pushback to the SMA and then a continuation lower. That's what I'm looking for. You've seen that pretty consistently through the years. Going back to December of 21, you can see big move down, very extended, retraced up to the SMA, over through it, and then broke back below it. which ended up being a pretty good 3-week style push up to that 21 EMA. These moves can be pretty aggressive to the upside. Still think that that is going to happen, and this week has not changed that thesis. The trend line would be somewhere in here, 59.90, maybe a little bit lower, 59.30, somewhere in here. Couple of weeks of push into this zone, and then get that kind of continuation lower to the trends here around 54.100, 54.30, I think makes sense. Just depends on how aggressive to the upside it is. And for me, I think a move of about 4.5%, maybe 5% makes sense somewhere in here, and then get that lower high setup off of this topping pattern. And then looking at that daily chart, you can see the trend that we were just talking about continues to hold that trend. The 200 was resistance through the entire week, so that's a zone where we do have to get through if we're going to find our way up into that 59.90 area. Extending that trend line out gives you a target around 595, 594, somewhere in here. So everything kind of fits with this zone being the area where we could get to, but you need to see a push through this area here. 569.90 to 574 I think is going to continue to be major resistance, but I do like this low, slightly higher low setup, slightly bullish momentum, looking for that push into this area. I do think it's possible. And then looking at the Tasty charts here, we are still in bearish conditions. Obviously, we haven't gotten anywhere near that trailing stop, all the way up at 629 here on the weekly chart, which is a long way to go. That's a full 70 points or so to get to that level and continue to stay in bearish conditions. Obviously not a great metric to trade off of, but that's what we are. But that's the condition that we're in on this weekly chart, bearish conditions, expecting lower high setups. Even if we triple topped in here, that would still be bearish for me. I don't think we'll get that high, but it's always a possibility. And then looking at that daily chart here, this just does not look good at all. You can see big move down, consolidation at resistance, couldn't get above that 8 EMA at 564.65. And then the trailing stop is right in that zone that we were looking for, 592.50, 593, right in there, makes sense. As your trailing stop, if we rally into that zone, find resistance there, get the continuation lower, that's going to be pretty dramatic as these ATR bands continue to trend lower. Did see a little bit of volume there on the last day of the week, found a bounce in that zone. Nothing super interesting in terms of direction, but this daily chart here on the Tasty charts continues to look quite bearish for me. Moving over to the NASDAQ, we got this major trend line that we continue to sit on here. We're still below it, so it doesn't look super great right now. So you got a breakdown retest. If you get the continuation breakdown, that's going to be very, very concerning. In terms of the MACD, we are already at a very low level. You can see the last time we were at these kind of low levels on the MACD was all the way back here in February, which ended up being a really consistent down move all the way to the 200. That's the concern, right? So you get a kind of big jolty style move down, get a retracement, something like this is what we're looking for, hit some of these EMAs and SMAs, and then get this bigger continuation lower where you have a really solid move that was basically 2 months in a row of straight downward progress. Again, aggressive retracement, counter trend rally, hit the trends, continuation lower, pretty consistent trading there. So that's what we're looking for, something like this in here. I think you probably need a little bit more bad data before we get a move quite like that. But based on this metric, based on this kind of joltiness here, expecting a little bit of a retracement, potentially into the 21 EMA area, retest, continuation to that lower low, which should take us potentially into the 17,008 to maybe 17,001 kind of range. Somewhere in here makes sense to me. And then looking at that daily chart here, you can see we're stuck in this kind of trading range here. Honestly, probably need to pull that down just a little bit to even those out. Kind of makes a little bit more sense to me there, which honestly, I wish I did that a little bit sooner. It makes more sense why we finished pretty much right at that level. You can see that structure we were watching in here. Tried to go higher, couldn't. Obviously, we've moved down pretty dramatically from there. We're in this big volume zone. Makes sense that we're getting kind of stalled out there. But if this zone here breaks, that's the big concern, right? Because that would take you potentially down into the 430s, 440s, somewhere in this area, all the way back to the price action we saw in August, where you had a really consistent down move into this zone here. So that's what we're waiting to see. Is that going to come to fruition? Let's go ahead and extend out that trend line, because that's definitely going to be in play within the next couple of weeks, in my opinion, which would give you a target pretty much in line with the lows here from September, somewhere around the 450 to 454 range, right in here, if we did get a pretty aggressive move into that zone, which anything's possible. Markets can do anything at any given time. I know I've said we're looking for a retracement here, and I still think that that is true, but you could absolutely see a big move down, kind of consolidation, and then the continuation lower without that retracement. So anything's possible. Make sure you are looking at both sides of every trade. Moving over to the Tasty charts here for the NASDAQ, we're actually still in bullish conditions, which is interesting because the NASDAQ did fall a lot further than the SPY charts, but we had a lot further to go here before we hit that trailing stop. So 476 is the level. We tested it again this week. We held it there. And then you can see here on that 55 EMA, also holding that on a closing basis, which is there at 479.02. We touched it and closed on it on the previous, and then we touched it here this week and then got a little bit of a bounce to close above that level. Again, big volume the previous week, and then got a little bit of a slight continuation, but very little volume. So need to see a confirmation style candle, at least a little bit, maybe into this 490, 495 area. That would be interesting. Take us back to this high from mid-July. But realistically, you want to see a move kind of in here, 512, 510 to 512, get a zone in here, and then get that continuation lower to that lowest ATR band, which will drift lower as we get the continuation in price action. So that would be the target, somewhere in here between 440 and 450 over the next couple weeks, but in the short term, looking for a move back into that 510 area. And then looking at the daily chart, again, same as the SPY charts, very, very much bearish conditions. Again, does not look super good. Looks like consolidation below that 8 EMA. 480.35 is that level. You can see we did close above it just by a couple of pennies at the end of the session. That was an end of session push, getting about 50 cents above that. Need to see it push into here at least to the 498 area, maybe as high as 404, 405, and then the trailing stop above that 413.64. If we get anywhere near there, absolutely expecting bigger sells from that area. We'll see. We'll see how much these charts continue to dictate price. You haven't seen really any volume through this consolidation. And if we do get a continuation to this lowest band, that's going to take us all the way down into the 454, 453 area. So absolutely could get that continuation of around $30 lower, or just short of another 10% lower if we did get that style of move. So the fact that we didn't break out to the upside is a little concerning, and now we're coming off of that quad witching, which could allow this to fall a little bit further. So keep both sides in mind. Still looking for a little bit of a push to the upside, in my opinion. Moving over to the Russell here on the weekly chart, you can see we threw a big wick the previous week. We ended up with a slightly positive week this week, 0.44. Momentum hasn't gone with it yet. Again, extended on the RSI, looking for a retest of the SMA, and then a slight continuation lower potentially. Based on the weekly chart here, we're still stuck in this 201 to 205 range. Want to see it push at least to 214, maybe as high as 223, but then I would expect some big sellers to be hanging out in this area. You can see the volume profile here. Big sellers, in my opinion. If we can break through here, that's where I would expect to go, and then I would expect to see sellers come in and drive price lower from current. If you're looking at the volume profile and we can get through this kind of bigger section here, then you're looking at potentially as low as 185, kind of back into this consolidation range here. Makes sense with the profile in here, so that's interesting. And then if we did get through there, then your next profile is in this 172 to 177 area. I don't think that's going to happen in the short term, but either way, looking for a bounce, need this trend line to hold. As long as the trend continues to hold, we're looking for a push to here. You do have some intermediate resistance here as well. So overall, still short-term bullish. And then looking at that daily chart, this does not look nearly as good as some of the other charts. You can see we tried to rally up. We tried to break out from this base formation. Got some rejection from that 21 EMA. Need this higher low setup in here to hold. Momentum, not great, but slightly bullish. Want to see it push from this zone. As long as 201 holds, we're in good shape. If 201 breaks and then we get through 198, then it's kind of look out below for that 185 area that we talked about. So far so good in terms of holding the base, but it doesn't look as good going into that Friday. Would have liked to see it stay positive with the other major indices. Moving over to the Tasty charts here for the Russell, you can see bearish conditions still continuing to step down at 234.60 for this week. Again, that would kind of take you into here, maybe as high as 227.87. I don't think we'll get as high as that trailing stop, but in the short term, looking for a move into here. I think we can retrace a lot of this and then get that lower high setup, and then you're going to see a pretty dramatic move to some lower lows. 184, 185 I think makes sense for that next section, just like we talked about on the previous charts. Still makes sense on this chart as well. Basically no volume, momentum slightly stepping to bullish, so looking for a little bit of a move like this where we can see some nice rallies out of this zone. think it's possible. The 144 EMA is also support there at 203.16, and we did close above that at 203.77. So slightly bullish on that close relative to that level. Then looking at the daily chart, pretty much the same as everything else. Zone of resistance going to be 215.56. If we can get through there, maybe we get to the 220s, but I could absolutely see a rejection from here and then a continuation lower as this continues to trend down. Look at these bands continuing to be very aggressive to the downside. Could absolutely see 185 being that next zone of support before we see another counter trend rally. Moving over to the Dow weekly chart, the Dow actually had a really good week, up 1.2% coming off of the trend line here. We hit the 55 previous week, held the close, and then rallied up a little bit back above the 418.38 area. So this looks a lot better. Want to see this continue again to that 432.78 area. This is what we're looking for in here. Still expecting the lower high. Maybe we get a push into the 440s, but not expecting that. I'm looking for a push to here and then that kind of continuation waterfall sell-off. If you look at the volume profile, very important zone right here that we're currently holding. Not a ton of volume through here. If it pushes through here, you could go as low as the 380 area back into this consolidation area. And honestly, if we got there, in my opinion, I would be looking for a touch of these kind of 144 and 200 SMAs. Obviously, these will continue to trend up over the coming weeks, potentially ending up in that same area that we're talking about, that kind of 375 to 380 area makes sense. So it could take several weeks to get there and give this time to kind of move into this zone. This makes sense to me, especially with that volume profile. So again, short term, bullish, just like everything else, looking for a move to here, and then a lower high setup continuation lower to these kind of zones down here. Moving over to the equal weighted S&Ps, very similar to the Dow and the Russell, kind of a mix between the two, right? So the Dow was very positive, the Russell was not, so we're kind of mixed at a very slightly positive week. Threw a wick to the level 175.38 and then could not hold above it and then retracted kind of in the middle of the range. The support is still 173.05, closed above that level. So for now, that's what we're expecting, looking for this zone to continue to hold. The 55 EMA there at 173.11. Look for a push into the 179 area and then get that lower high setup with the low, lower, low. And looking for that third low kind of into this range here makes sense, 164, 165. Bring us back to this consolidation and then we'll see what happens. Do we get another bounce into a lower high and then another lower low, potentially as low as the 200 in here around 155? That makes sense, but again, that's kind of a medium term style thesis. Short term, a little bullish. Next couple of weeks, definitely bearish, at least for now. Moving over to the ratios, you can see the SPY did underperform the Russell here today. On the week, at least, you can see down 0.12, pulling back slightly, almost touching the trend. The SPY has been outperforming for several months at this point, but we're seeing just a slight hesitation here after touching the resistance at the 278 level. Similarly here, NASDAQ also underperforming. So the SPY has been doing the best of the group, and that's what we got again here this week. So pretty good numbers. Momentum still continues to be bearish on the NASDAQ. That's probably going to come down a little bit lower, but either way, SPY still seems like the best, which makes sense. We saw the Russell continuing to be negative this week. Moving over to the SPY divided by the M2 money supply, we did almost touch that 25.9 level again, but we continued to hold support here. Fits with the overall thesis of a clean support, looking for a retracement to this next level, and then continued selling from that zone. Momentum very bearish, just like we saw on the SPY charts. RSI a little bit oversold from that SMA, looking for the retest here. So continuing to watch this key support area just below that 55 EMA. If this goes this week, the next level is not for a while, down at 2450. So pretty substantial move there, 25.9 to 2450. Moving over to the Mag 7, down 5 weeks in a row, down just 0.63 this week. We did touch the level 265.08, so we finally touched that level after breaking through 273 last week. Didn't quite touch it and bounced. And then on both candles here, we did close above 273. We're just below that 55 EMA at 277.01. So a little bit of mixed signals. Did catch the bounce. And I want to show the daily chart here. You can see, look at that Friday session, really strong Friday session, up 1.73%, far outperforming markets. And this is what you want to see if you're going to get that recovery style move, at least a counter trend rally, in my opinion. You want to see market leaders leading to the upside. And this was a nice push. We talked about some of the individual stocks in the Friday video. Looks really good here. Want to see that continuation at least into the 280s, 285. And then realistically, you want to see a push here to 305, touch this zone here, and then get that lower high. Pretty much the low of this consolidation before we saw that bigger sell price action. So either way, still looks like a topping pattern. Want to see a lower high, double top, something like that, continuation lower. Moving over to Apple and Microsoft, both of these had really good weeks, up 2.24 and 0.69% respectively. You can see Apple came down to that 211 level once again, found a bounce, got back above 217. So really strong push, especially relative to markets. Definitely some relative strength there coming off of this level here. And then looking at Microsoft, similarly, touched that low 378.77, got back above 388, pushing towards 394, closed above the body of the previous candle. Both of these finding support. You can see momentum stepping to bullish. Therefore, Microsoft, not quite seeing that yet on Apple, but both of these had really good weeks, and they are some of the leaders here in the Mag 7. And if markets are going to go higher, you really need these biggest stocks in the world to continue to show a little bit of strength into next week, which, based off of the structure here and these kind of bottoming formations, I do think these should go a little bit higher. Looking for Microsoft to get potentially as high as that 413 area. Still think it'll probably reject from there into a lower low, but in the short term, I think we can see 1 to 2 weeks of bullishness into that range. And then similarly here on Apple, looking for a push into this zone here, 229, retest some trends, and then we'll see if we get another high, lower high potentially, and then push down to this trend in here around the 200 area. Makes sense to me. Moving over to Tesla and NVIDIA. Tesla was down about 0.5% on the week. NVIDIA even more there at 3.26%. Still holding support at 116.70 for NVIDIA. Tesla retesting 232.57 and then bouncing into the end of the week like we saw pretty much across the stock market. Momentum really weak here at a -23. You don't see that super often. Even on Tesla, you'd have to go further back than it even shows here to look at a movement of that strength. So we haven't been this low on strength for Tesla. It's been a very long time. Continuing to think that 214 is support. We haven't even quite touched it yet. We're continuing to hold in here, and I think that's probably going to continue. Again, the Friday was really strong for Tesla. NVIDIA, structurally, this is getting weaker. You can see the 9 is below the 21 EMA. We're below that with 55 EMA. We've been below it a little bit. Momentum still holding in bearish territory. RSI still holding in bearish. We still are holding just above this support area here at 106.64. Like I said, 116.70 is your current support, but structurally, this does look pretty weak, and it wouldn't shock me if we did at least retest 106.6 before we saw a little bit bigger push into the 130s, 140s area. So either way, short term, I like these to the upside, but I think NVIDIA might go a little bit lower first. Moving over to Amazon and Google, both of these were down on the week, right in the 0.8 area, 0.88 and 0.82 respectively. Momentum bearish, RSI still extended. You can see Amazon continuing to hold support at 194.49. We overthrew the low each of the last weeks, but continue to hold above that 55 EMA. So want to see that continue. If we're going to get the push to the upside, it wouldn't shock me again to see another wick to the lows before that happened. And then looking at Alphabet, touch that 161.59 level, caught a bounce from there, end of the week push. You can see big wick rejection at support. So again, want to see it hold, want to see a retracement, and then get that bigger push, probably at least to the 150 area, potentially as low as 138. Culmination style move there. And then Amazon, if we did get a push to that 200, that would be the 153.50 area. Again, not expecting that in the short term, but over the medium to long term, I do expect at least a retest of that 200 area, really across the stock market. Moving over to Meta and Broadcom. Both of these were negative on the week as well, 1.87 and 1.98% respectively. Structurally, these are in much better shape, though. You can see still well above that 55-week moving average for both of them. Meta has been the best performer year to date, I believe, when it comes to the Mag 7, so Meta still holding up really well. It has round-tripped a lot of this move, this kind of culmination style move, so it doesn't mean that we're going to go up from here necessarily, but in terms of relative strength, it is very interesting. Similarly here on Broadcom, really powerful move, still holding a higher low structure from here versus the either double bottom or slightly lower lows that we've seen really across the rest of markets. So Broadcom and Meta in pretty good shape. I would like to see these start to lead to the upside. Really, it was Apple and Microsoft that were leading this week, but over the medium term, these should do well. Moving over to staples and discretionaries, again, we're still seeing a little bit of risk on markets here at this key support. So staples was negative about a quarter. Discretionaries was positive about a third. So nice little distinction there between risk on and risk off. Want to see this continue to show a little bit of strength relative to Staples. Staples is at support at the 55-week moving average, 79.18, the level 78.88. Want to see this zone in here hold, but either way, looking at discretionaries for a bigger retracement, fill this gap here, potentially push all the way up to the 215 area. Then I would expect a lower high, and then we're looking for that kind of bigger culmination style move to that 200, which would take us all the way down to the 174.76 area, up to potentially 180.10, kind of this zone in here, right at the highly traded zone. Moving over to breadth, 20 and 50-day breadth. 20-day was slightly positive on the week. Same here with 50-day, slightly less positive, but still positive. The Friday was not great. Markets were relatively strong on Friday, and breadth was not strong on Friday, so that's concerning, but we were positive on the week. Want to see a little bit of a continuation off that positive momentum from the bullish close. The actual momentum here on the MACD is still bearish. RSI still a little bit bearish. So a little bit concerning. Want to see breadth move in the direction of markets to kind of confirm the move, and that's not quite what we got on the Friday. But either way, holding support at the 28.21 level and the 32.22 level on both of these for these respectively. Moving over to 200-day breadth, same thesis here pretty much as the others. You can see very slightly bullish candle, big wick rejection the previous week. Still can't get above the 42 level. We did test it and reject from there. Still below that 50 line on breadth. Not great with that either. We did hit a pretty decent zone. This 35 level has been some pretty key support over the past couple of years. We haven't been below it too often. You can see back here in October of 23, that was a nice critical low at the 24, 25 level, and then bounced pretty strongly from there. Below that, you just don't see it very often. This was the June-July low period, which resulted in a very strong push. This was COVID. Obviously, COVID was terrible. That got us all the way into the twos. You don't see that pretty much ever. Huge buying opportunity there. But in this 30 area, right where we are now, not super common. Usually you see some pretty decent bounces out of here. Something like this is what I'm looking for, right? So we get a touch, couple of weeks of bullish retracement to those lows, and then we'll see if we get another bounce or we get more of a continuation low through here down to the 20s. So right now, expecting short-term push still based on this chart. Moving over to the dollar here on the weekly chart, we got a little bit of a bounce up, almost 0.5%, continuing to hold 103.6 as the support. 104.4 is your next resistance. Realistically, though, if this continues to hold this trend, which we did get back above it this week, then we should look for a push to here around the 106.8 area. That's what I would be looking for over the next week to 2 weeks, maybe even 3 weeks into this zone, and then we get the lower high setup. At this point, I think we're probably going to get kind of a consolidation style move. So you have a really powerful push here, pretty deep cut low, still a higher low from here, but I would expect a lower high. So some kind of wedge pattern where we kind of tighten up over the next couple of weeks to potentially months. And then we'll see what we get a break from there. But that's what I'm looking for on the dollar. So a stable dollar should give equities a little bit of room to the upside, in my opinion. Moving over to bonds. Bonds were actually good on the week, up about 0.5% for each of them, continuing to show structure and support in these zones. TLT holding above the 21. Want to see that continue. Resistance was the 55. Want to see that 21 hold. Very important there at 89.72. My support 89.16. So we're hoping this zone holds. Higher low setup continuation. Looking for a push back to the hundreds ultimately, but in the short term looking for that 92.82 break. And then looking at J&K, still in this kind of same consolidation range. That's really all we're looking for on J&K. As long as this stays stable, that means markets are not super concerned about recession, and that's what we're hoping for, at least for now. Moving over to the VIX here on the weekly chart, 2 weeks in a row of downwards movement. Caught that wick high to the zone here at the 28 level. So far we've pulled back. This is a zone where we could find support. Remember, we talked about it on the Fear and Greed Index. It could bounce from here, but momentum stepping to bearish. Want to see this continue to that 1470 area. 1750 to 18 could be a zone of support. We'll see if this ends up holding or not. Kind of right in line with that EMA that we saw on Fear and Greed, but momentum stepping down, RSI. Want to see this continue to roll here, but it needs to break that SMA. So a little bit of mixed signals, looking for a continuation lower. Moving over to my accounts, I did okay. I was down a little bit on the week, which is frustrating because most of the major indices were slightly positive. That first Monday was a big down day, more aggressive than I thought that it would be, and then we kind of consolidated, but I didn't really trust it after that because of that bigger Monday move down, and I didn't trade super well on the Monday either. So that was a little frustrating, but was able to make up for some of that and get back to positive on the year, so that's good. And then for the Monday, we have $2.45 credit about $2.20 left of that here, looking for the Monday at a 476, 477. Again, looking for a bullish push next week. I'll continue to size up here if we do get continuations higher, which is what I'm looking for into the end of March. And then we'll see what happens as we roll into the April timeframe with those tariffs. Maybe we get a little bit more news about them. We do have a lot of economic data this week, but overall looking for at least a short-term rally here for next week. Let me know down in the comments section what you thought of these strategies. Where are you putting money right now? Are you buying bonds, dividend payers? Are you holding cash, or are you continuing to dollar cost average into these markets, into growth? What are you doing with your money and your strategies? Put it down in the comments. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.